Thanks, Nathaniel. Hello, everyone, and welcome to your weekly crypto and digital asset update. I'm Catherine Murray. We are seeing cryptocurrencies trade lower this week alongside the equity markets, which have been feeling a little bit of pain and pressure to the downside, of course, on concerns that inflation is a little bit hotter and stickier, and therefore the U.S. Federal Reserve will likely continue to be on the rate hike path. Having said all that, again, we are seeing risk assets having a bit of pressure today. Cryptocurrencies are trading down by about 4 to 7%. Bitcoin is looking to end the week on a down note as well, of course, being the leader with about 47% of the overall cryptocurrency market. And it does put cryptocurrency's valuation at just under $1 trillion right now. Call it about $950 billion. So a far cry from the height of about $3 trillion going back prior to the crypto winter. In terms of a number of news items to cover this week, Silvergate, which is a crypto bank and also interestingly publicly traded under the ticker SI, has told the SEC that they are going to be delayed in their filing of their annual financial reports, that they need more time to audit their own records, and have gone on to say that they may be less than well capitalized. And they also said that they are reevaluating their business. That stock price is down by about 58%, and also apparently is one of the most heavily shorted stocks on the New York Stock Exchange. Away from that, as we look at government's involvement within crypto and blockchain, the BOJ, or Bank of Japan, has confirmed that they're doing a pilot program for their CBDC. CBDC, just to remind everybody, because we haven't talked about it for a little bit, is a central bank digital currency. And there's a number of central banks around the world that are actually looking at this. BOJ confirming that they are, in fact, doing a pilot program. They haven't yet decided whether or not they're going to actually issue a digital yen, but rather see that the pilot program is a means to figure out what the best use case and needs are of the potential users. The BOE, the Bank of England, has also said that a digital pound is not a question of how, but just a question of when. In terms of FTX, the continued fallout from there, some interesting news items. FTX's debtors have published a presentation about the assets and the liabilities of the company, and have illustrated, as expected, that they have an $8.7 billion deficit, and said that the exchange's assets were highly commingled, which we have talked a lot about and has been revealed, and that the books and records are incomplete and in many cases totally absent. So again, confirmation of many of the news items that we've been covering for the past 2 months or so. Meanwhile, Visa is refuting a story from Reuters earlier this week, saying that they have no plans, Visa has no plans to slow down their partnerships with cryptocurrency companies and crypto firms. Reuters said that Visa was slamming on the brakes in terms of new partnerships on the back of the FTX fallout and obviously the crypto winter that we've been witnessing. But again, Visa is not saying that that is the case, that they are continuing to move ahead with the investments within blockchain and cryptocurrencies, because blockchain is the underlying technology that they appear to be very interested in. And in fact, earlier this year did do a deal with WireX, which is a crypto app, in order to really present and offer more options, more payment options around the world for their users. Interestingly as well, Coinbase, which facilitates trading in cryptocurrencies, they apparently have a user base of about 100 million people. They have done a survey, which is really quite interesting here, and they found that more than 50 million Americans do own some type of cryptocurrency, so about 20% of the population. And part of the incentive they have found in their survey as to why people own cryptocurrencies is because many people believe that the global financial system is unfair. And again, cryptocurrencies, blockchain is a way to perhaps move out of the fiat currencies and the regulations of the central banks around the world, and again, have it more of a level playing field. That's the theory. They also, in their survey, have found that younger Americans are more interested than older Americans. So in other words, it's the Gen Zs and millennials that are leading the way here and currently own cryptocurrencies and continue to expect to own more. Nathaniel, I'll leave it there. A lot going on in the cryptocurrency and blockchain world, so much more to discuss for sure.